Okay, tell me honestly, when you hear someone say public sector health insurance company, what's the first image that comes to mind? For most people, it's some serious sarkari vibe. Long queues, paperwork, and well, decent but might not be the most exciting service, right? But here's the thing. Public sector insurance companies have actually been the backbone of India's insurance landscape for decades. And when it comes to health insurance specifically, they still serve millions of Indians every single year. Hey everyone, I'm Shashank from Ditto Insurance, and if you're feeling overwhelmed about choosing between public sector health insurance companies or private ones, don't worry, you're in the right place. Also, quick reminder before we get into it, if you want free, honest and no spam consultation about which health insurance plan fits you best, book a call with Ditto's advisors. Link is in the description. Totally free, and we don't sell you stuff that you don't need. Alright, so now let's talk about the major public sector players in health insurance. And just to be clear, this isn't a ranking. I'm not here to tell you that company A is better than company B. I'm here to tell you the facts, the real world pros and cons, and why sometimes choosing a government insurer makes sense and sometimes it doesn't. Let's start with National Insurance Company Limited, or NICL. This has a serious legacy. Established all the way back in 1906 in Kolkata, it was founded by Govardhan Das Dutiya and Jeevan Das Dutiya. Fast forward to 1972, it was nationalized and became a government entity, and today it operates independently under the Ministry of Finance. NICL has been one of the key companies during government-backed schemes like PM Fasal Bima Yojana and Rashtriya Swasthya Bima Yojana, which aim to bring insurance access to the poorest sections of society. When we look at NICL's performance numbers for health insurance, the CSR is around 93% over the last 3 years. Decent but not spectacular. Their incurred claim ratio, however, is 106%. Now, that's a bit worrying, and let me tell you why. Ideally, you want an ICR between 50 to 80%. Anything over 100 means they're paying out more claims than the premiums they're earning, which isn't exactly sustainable in the long run. They have around 3,200 plus network hospitals, and their complaints volume is about 29 per 10,000 claims, slightly on the higher side. Flagship plans from NICL include Parivar Mediclaim, Young India Mediclaim Plus, Senior Citizen Mediclaim, and their Super Top-Up Mediclaim plan. Honestly, if you're looking purely for affordability and are okay with a little bit of old school servicing style, NICL could still work. Now moving on to New India Assurance, the big boss of public sector insurance. Founded way back in 1919 by Sir Dorabji Tata, New India Assurance is today the largest public general insurance company in India by gross premiums collected. It's even listed on stock market, NSE and BSE, and trades at a market cap of over 25,000 crores. Their health insurance game is pretty strong. CSR stands at 99%, one of the highest in the industry. Their incurred claim ratio again is at around 111%, which again signals financial stress, but from a customer point of view, it means claims are getting paid. They have a network of 3,700 plus hospitals and only about 5 complaints per 10,000 claims settled, which is genuinely very low, especially for such a massive organization. Popular plans from New India include Yuva Bharat Mediclaim, 60 plus Mediclaim for senior citizens, and the New India Top-Up Mediclaim and Premier Mediclaim. And if you're starting to feel like, dude, this is getting confusing, all the CSR, ICRs, these plan, that plan, just remember, Ditto's advisors can break all this down for you in plain, simple words over a free call. Link is in the description if you need it. Now, let's talk about Oriental Insurance. Started in 1947 based out of New Delhi, Oriental Insurance was originally under LIC, but post-nationalization came under GIC and eventually became autonomous in 2003. They have over 1,500 branches, 29 regional offices, and they even have small international presence in places like Nepal, Kuwait, and Dubai. Their CSR stands at 96%, which is pretty strong. But the incurred claim ratio is big red flag, sitting at 124%. In simple terms, they're paying way more in claims than they're collecting in premiums, which could mean financial strain unless the government keeps recapitalizing them. Network hospitals, over 4,000. Complaints volume, some discrepancy in reported data, so we don't have a reliable number here. Their flagship health plans are Mediclaim, Happy Family Floater, Super Health Top-Up, and Youth Eco Care. Then there's United India Insurance Company. Based out of Chennai, it started in 1938 and was nationalized in 1972. UIIC serves a huge part of rural India, and they've played a major role in driving insurance penetration to underserved population. United India CSR is 94%, their ICR is 106%, hospital network 4,000 plus, complaint volume 8 per 10,000 claims, quite manageable. Popular plans from United India include Family Medicare, their individual plan, and Medicare Super Top-Up. Now, all this sounds okayish, right? But when you look a little deeper, you realize public sector health insurance companies come with serious challenges too. High ICRs, dependence on third-party administrators or TPAs for claims, outdated digital platforms, smaller hospital networks, expensive plans with restrictive features like room rent limits, disease sublimits. It's not always the smoothest ride. To put it bluntly, even though their CSR is high, their product often feels outdated compared to modern private sector plans. Take private insurers like HDFC Ergo, Care Health or Aditya Birla. They offer massive hospital networks, 11,000 to 13,000 plus hospitals compared to 3,000 to 4,000 range of PSUs. Their ICRs are financially healthier, 59 to 86%, meaning they're sustainable. And the policy features no room rent restriction, no disease-wise sublimits, richer bonuses every year irrespective of claims, and better pre- and post-hospitalization cover. Also, no dependency on TPAs for claims. Most private players settle claims in-house, leading to faster and cleaner service. Obviously, private insurers aren't perfect either. They can be stricter when underwriting your health risks, especially if you're older or have pre-existing illnesses. Premiums can be volatile over time, and of course, aggressive sales practices are a risk, which is why at Ditto, we never hard sell policies. We only recommend what actually fits your needs. Despite above-mentioned challenges, private health insurers are generally better aligned with evolving needs of modern policyholders. Their tech edge, faster and more transparent claim processes, innovative policy structures, and personalized service make them a compelling alternative to traditional public sector insurers. While public sector insurers bring decades of legacy, trust, and wide recognition, they often lag in key areas such as digital capabilities, service responsiveness, and product innovation. As customer expectations continue to evolve, it is imperative that PSUs step up their game by modernizing operations, expanding digital infrastructure, and introducing more competitive and customer-centric offerings. For today's policyholders, especially those who prioritize convenience, flexibility, and a seamless experience, private insurers present a stronger, more future-ready solution that is better equipped to deliver value in a dynamic healthcare landscape. And hey, if you want simple recommendation tailored to your profile, your age, your city, your health condition, don't waste time guessing. Book a free call with Ditto's advisors. Our team explains everything slowly, clearly, without pushing products. Totally free, totally unbiased. Links in the description. That's it for today's breakdown, folks. And if you like this detailed comparison and want more such no-nonsense insurance content, don't forget to like, subscribe, and share with your family and friends. I'll see you in the next one. Until then, happy insurance hunting.